September 15th, 2008, 1:45 a.m. Lehman Brothers, a 158-year-old bank worth $600 billion, files for bankruptcy. Within 24 hours, $10 trillion vanishes from global markets. ATMs stop working in 47 countries. People can't access their money. The global economy flatlines. This wasn't just a crash. This was the closest we've come to complete financial apocalypse since the Great Depression. And it started with one simple lie. Housing prices never go down. Here's exactly how it happened. Early 2000s. America is obsessed with home ownership. But there's a problem. Millions of people can't afford houses. Bad credit, low income, no savings. Banks used to say, sorry, no loan for you. But then Wall Street discovered something brilliant and evil. What if we gave loans to everyone, even people who can't pay them back? They called these subprime mortgages. Subprime equals trash. Here's how the scam worked. Step 1, the teaser rate. Hey, want a $400,000 house? Your payment is just $800 a month. Sounds amazing, but there's fine print. For the first 2 years. After 2 years, payment jumps to $3,000 a month. Can you afford $3,000? No? Don't worry, the bank says. Housing prices always go up. In 2 years, your house will be worth $500,000. Just refinance. It's a trap, but millions fell for it. By 2005, banks were giving loans to anyone with a pulse. No job, no problem. No income, no problem. No assets, no problem. They called them ninja loans. No income, no job, no assets. A stripper in Florida got approved for 5 mortgages worth $2 million. A homeless man got a $400,000 loan. Banks didn't care if you could pay because they weren't keeping your loan. Here's the genius evil part. The bank gives you a mortgage on Monday. On Tuesday, they sell that mortgage to Wall Street. Now, it's Wall Street's problem, not the banks. So banks had zero incentive to check if you could actually pay. More loans, more money. Who cares if they're trash? By 2006, $600 billion in subprime mortgages were being issued every year. But Wall Street wasn't done. They were about to make it so much worse. Wall Street took those trash mortgages and created a financial weapon. It's called a CDO, collateralized debt obligation. Here's how it works, simplified. Take 1,000 mortgages, good ones, bad ones, terrible ones, and bundle them together. Slice them into 3 pieces. Top slice, AAA, gets paid first. Safe. Middle slice, BBB, gets paid second. Risky. Bottom slice, junk, gets paid last. Basically worthless. Now sell these slices to investors worldwide. Hey, pension funds, want AAA-rated investments? Super safe. But here's the scam. Those AAA ratings were lies. Rating agencies, Moody's, S&P, Fitch, were paid by the banks to rate these bundles. If they gave a bad rating, the bank would go to a competitor. So they gave everything AAA ratings, even the trash. It's like asking a restaurant to rate its own food. Of course everything gets 5 stars. Pension funds, retirement accounts, foreign governments, everyone bought these toxic CDOs thinking they were safe. $2 trillion worth. A ticking time bomb. But Wall Street still wasn't satisfied. They wanted to make even more money off these CDOs. So they used leverage. Here's leverage. You have $1. The bank lets you borrow $30. Now you can invest $31. If your investment goes up 10%, you don't make 10 cents, you make $3.10. Amazing, right? But if it goes down 10%, you lose $3.10. You're now $2.10 in debt, and you only started with $1. Wall Street banks were leveraged 30 to 1, some even 40 to 1. Bear Stearns, 35 to 1. Lehman Brothers, 31 to 1. Merrill Lynch, 40 to 1. They were gambling with borrowed money on trash mortgages packaged as gold. One bank, AIG, sold insurance on these CDOs. They were called credit default swaps. "Don't worry," AIG said, "if these fail, we'll pay you." But AIG didn't have the money to cover losses. They were just collecting premiums and praying nothing would fail. Everyone was making billions, until the music stopped. 2006, housing prices stop rising. Remember, the whole system depended on prices going up forever. People with those teaser rate mortgages, their payments just jumped from $800 to $3,000, and they can't refinance because their house lost value. So they default. They stop paying. One default, then 10, then thousands. By 2007, foreclosures are exploding. Empty houses everywhere, for sale signs on every block. And those CDOs, they're filled with these defaulting mortgages, which means they're worthless. Banks start checking their vaults, say, wait, how much of this trash do we own? Turns out, trillions. And nobody knows who has the most. Everyone's lying about their losses. Trust evaporates. Banks stop lending to each other. That's when everyone realized we're in big trouble. March 2008. Bear Stearns, fifth largest investment bank in America. They owned $13 billion in subprime CDOs. Suddenly, nobody will lend them money. Bank run in slow motion. In 1 week, they go from "we're fine" to bankrupt. The Federal Reserve arranges an emergency sale to JP Morgan. Price? $2 per share. 1 year earlier, $170 per share. $20 billion in value? Gone. Everyone's scared, but the government says, "We saved Bear Stearns. Crisis contained." They were wrong. September 12th, 13th, weekend. Lehman Brothers is dying. $600 billion in assets. 25,000 employees. The government, the Fed, Wall Street CEOs, all in emergency meetings. We need to save Lehman, they say. But Treasury Secretary Paulson refuses. No more bailouts. Lehman needs to fail. Moral hazard. September 15th, 1:45 a.m. Lehman Brothers files for bankruptcy. The largest bankruptcy in American history. And that's when the world ended. September 15th, market open. Dow Jones drops 504 points in minutes. $700 billion vanishes in 1 day. Credit markets freeze completely. Companies can't make payroll. ATMs start failing in Europe and Asia. AIG, the insurance company that promised to cover everyone's losses, is about to collapse. If AIG fails, every major bank fails. Global banking system dies. September 16th, the Fed gives AIG $85 billion. It's not enough. Over the next month, AIG gets $182 billion, the largest bailout in history. But the dominoes keep falling. September 17th, money market funds, considered 100% safe, start collapsing. September 18th, the Fed has to guarantee money market funds. First time ever. September 19th, Treasury Secretary Paulson asks Congress for $700 billion to buy toxic assets. The TARP bailout. September 29th, Congress votes no. Dow drops 778 points, biggest point drop in history. Retirement accounts lose $1.2 trillion in 1 day. Congress panics, votes again, passes TARP. But it's too late. The damage is done. October 2008, Washington Mutual, largest bank failure ever. Wachovia, sold in emergency to Wells Fargo. Merrill Lynch, sold to Bank of America. Morgan Stanley and Goldman Sachs convert to bank holding companies to survive. Iceland's entire banking system collapses. The country goes bankrupt. In America, 8.7 million jobs lost. 6 million homes foreclosed, 19 trillion in wealth destroyed, unemployment hits 10%. Suicide rates spike 5%. Globally, $50 trillion lost, 75 million people pushed into poverty. Europe enters debt crisis. China's growth stalls. Revolutions in the Middle East, the Arab Spring, partly economic. The world was on the brink of another Great Depression, and we're still living with the consequences. So who paid for this disaster? Not the banks, not Wall Street, not the people who caused it. You did. $700 billion in bailouts, trillions more from the Federal Reserve. Banks got rescued. CEOs kept their bonuses. Meanwhile, 6 million families lost their homes, 8.7 million lost their jobs, middle-class wealth destroyed. And here's the most infuriating part. How many bankers went to jail? 1.